what reaction do you expect from the markets to this announcement?
Well, I think that we will probably have good discussions with our colleagues in the coming months, with our customers in the coming months about this rate increase. Obviously, there will be some concerns on the impact and so on, and we will have to continue to explain to our customers why this is necessary.
And are you prepared to lose market share over this?
Well, clearly, it would probably be naive for us to think that we could increase rates by $1,500 globally without the risk of losing some market share. So that could ultimately be a consequence. We obviously hope that we can maintain our market share, that we can convince our customers that this is a legitimate request, and that we can continue to work together.
But will you be prepared to offer customers new levels of service and guarantees of those services in response to the increase?
Well, I think we have been developing our level of service in the past 3, 4, or 5 years continuously, both in terms of the geographic coverage, the number of services that we have, but also on the technology side. And part of the reason for why we want to get prices up is that we want to be able to continue that development. But it all costs money, and that's what we are trying to get here.
Did you think of excuse me? Did you think of segmenting the rate increases across different trades rather than the global all-in-one increase?
Yes, we did, but we also came down with a clear choice that we don't want to do that. For us, it's very important that the actions we take on the pricing side doesn't change the competitive dynamics of our customers. We don't want to be seen as favoring one region of growers towards compared to another, for instance. So by having one rate increase across the board globally, we are also giving everybody the same level of competitiveness as they have today.
You mentioned about the difficulties of financing. Have you had indications from your financiers that they might be prepared to pull the plug, as it were, on the reefer business if you can't increase revenues?
Well, Maersk Line is part of the A.P. Moller Maersk conglomerate, and we are very, at the group level, a very substantial company with very well consolidated from a financial point of view. So the reason for why we have to take this decision is really very much about giving a decent return to our shareholders. So it's not really a banking issue.
But in relation to that, how much of a material impact will this have on Maersk's bottom line, this increase?
Well, it will obviously have a substantial impact because this reefer business is a substantial part of the business for Maersk Line. But we are also in need of substantial impact. As I mentioned at the conference, we had a loss in the first quarter of $600 million. We made 227 in the second quarter. So far for the half year, we still have a loss of almost $400 million.
And finally, will you be looking to? You said in your speech that there was that the returns on the reefer business were much the same as the returns in the dry business. So in your mind, they're one and the same. So presumably, we'd be expecting to see a similar increase in the dry cargo business.
Yes, but we are way ahead of the reefer business in that respect. I mean, the dry business have taken increases across pretty much every trade globally so far for this year, particularly in Asia, Europe, where rates have quadrupled. They've come off a little bit now, but they've certainly come up a lot. But pretty much every trade that we are involved in has taken rate increases.
But the dry business. But the Asia-Europe, in recent weeks, the Asia-Europe trades the rates have been falling once again. That must be worrying.
Yes, absolutely. I think we are planning to come with rate increases again on the 1st of November.